Let's find out what market analysts think. Stephen Gallo joins us now from Schneider Foreign Exchange. Stephen, good morning to you. Just looking at what's happening in Brussels today, has that driven the euro higher, or is there any reason specifically why it's bounced up a little bit?
I'm not so sure much politics this time was behind the euro's rise. I think, as we were speaking about earlier in an earlier broadcast, I think the market took the excuse, took the rumors of intervention from the ECB as an excuse to take profits. So we saw the euro-dollar rate rally. But I think, as I said earlier, I think selling opportunities are still quite abundant above 124.50 in euro-dollar and certainly above 125. So I think the market still remains incredibly short euros and willing to sell the euro further versus the dollar should we get any more political haggling today or early next week.
Now, what about those talks of intervention? Surely they're a little bit premature at this stage, are they not?
I think that's right. I think they are. I mean, on the one hand, as Judith was just pointing out, the core members of the Eurozone, France and Germany, et al., they benefit very, very, very much from having a weaker currency. If they were outside of the Eurozone, they would have very, very strong currencies. Secondly, we haven't gotten to a point yet where the declines were as catastrophic or near catastrophic as they were prior to the passage of that EU-ECB rescue plan. And also, I don't think we've seen a bottom yet in the euro-dollar rate. We may test lower levels yet. And depending on how low those new lows are, that may force a coordinated intervention, but we're not there yet. So I think you're right in terms of premature.
And what do you think those new lows could be? I know this is putting you on the spot a little bit.
That's fine. In terms of fair value, equilibrium value for euro-dollar, we do believe it's in the 130 to 135 range. But speculators could take it into the mid-teens, certainly. And I think if we move there in a very, very quick fashion, that will probably get the ECB and EU officials on guard. More importantly, though, if the dollar continues to strengthen based on how large of a trading partner the Eurozone is with the United States, it may be an issue to weaken the dollar, that it might be a coordinated intervention, not to strengthen the euro, but to weaken the dollar. And that's something that we could see. We've seen it before in the past, in the 1980s, obviously, but so it could happen again.
And before you go, what are you expecting to hear from the finance ministers' meeting today? Is there anything that they would say specifically that would move the markets? Any comments on short selling, for example?
I think, the more and more it looks like Germany is going to have to continue to go this one alone for the time being, the more and more negative it's going to be for the euro. So I'll be looking for any sort of signs of political haggling as an excuse to open up a new short in the euro-dollar rate.
And the pound as well, really not does appear to be mirroring what happens to the euro.
I'm sorry, you have to repeat that, Andrea?
I'm sorry, the pound seems to be mirroring what's happening to the euro at the moment.
I think the pound is getting a free ride. The political risks at the moment are much lower for sterling and also importantly the implementation risks for any new policies that come. You don't get the same degree of political haggling in the UK because we have a new solid government, at least for the time being. So the pound is doing well. It's getting a free ride at the euro's expense.
Stephen, thank you very much indeed.